just talked about the world of digital currencies. It's a complex and rapidly evolving world. And it's also the subject of our next panel. To learn more, let's have our next guests come to the stage. Under a warm round of applause, please, ladies and gentlemen. So welcome to all of you. Welcome to the forum. Thank you for joining us here this afternoon. Joseph Cox, you are a partner at Oliver Wyman and a veteran of the Fed. Kelvin Li, Senior Vice President at Ant International and General Manager of Platform Tech. And you, sir, are the Chief Executive Officer of Coinhouse Group, Nicolas Louvet. Thanks again for being with us. Now, I'm going to turn to you, Joe, to start with, because for the very first time in modern history, the monetary system's hierarchy is being challenged by digital issuers, platforms, and tokenized assets. But is this wave one of true monetary innovation or something else?
Great question. So I think there's definitely real innovation here. Representing money and other assets on blockchains makes them operate 24/7, real-time transfers, it's programmable, and it operates globally. And so that does have real benefits for particular use cases around cross-border payments or collateral mobility or things like that. But as a central banker, I also am very aware of the risks that come with this new form of money. And so the reserves backing a stablecoin are much like a money fund, and we've seen stress in money fund markets in 2008 and 2020 that required a central bank backstop. And so you could imagine pressure on stablecoin redemptions could lead to a need for a central bank backstop to prevent fire sale dynamics in money market funds, for example. You also could see a risk that stablecoins are too safe, and you see runs out of banks and into stablecoins during stress. I think a particular version of that could come from the intersection of digital assets and artificial intelligence, where as digital assets make assets and money more transferable, and then artificial intelligence makes customers sort of better automate and optimize their investments, you could see rapid runs, flash crashes out of banks that could require them to manage their funding and liquidity in new ways. And then I guess the final thing I'd mention is more of the macro story around dollarization, as the Trump administration has really put a priority on basically making it so that anyone on earth can hold US dollars and US dollar investments. I think there's many central bankers and other policymakers that are concerned about dollarization, the sort of lack of monetary sovereignty, and then disintermediation of their local financial institutions. So on the whole, there's definitely real innovation, but also plenty to be concerned about.
Joe, thank you very much for that. There's a lot to take in here because it's a fast-evolving landscape. Nicolas, next. Cryptocurrency were once viewed as speculative assets. Today, programmable money and blockchain-based settlements are a very hot topic in the financial world and beyond. So how much has actually changed, and what remains hypothetical, according to you?
Well, first of all, the vision that we have right now is the future of money and the future of transformation of banking system. But we still stick reeling digital assets with a trading venue. It's the biggest usage today and that's the case for the overall market. Bitcoin is above 50% of the overall marketplace market share, and the usage of stablecoins are more than 80%, 85% for trading. So we still see a usage which has not moved as much compared to the potential when you are talking about tokenization and all the transformation, the usage of payment that Kelvin will talk about with all what is done, it's still very, very small. We were talking before, it's less than 0.01% of what is used today for payment. So the narrative is still around trading, investment, but the future is really on the change of the overall banking rails, and the tokenization, the usage of payment will obviously grow fast in this future. What will transform this, what will help, is probably what we are going to discuss later.
Absolutely. Before turning to you, Kelvin, to talk about the big problems digital assets could help solve, Joe, I just wanted to ask you about the fact that the US, Asia, and Europe seem to be diverging somehow in their approach to digital money. How do you expect it to evolve? How do you see it evolving?
That's a great question. So I think the different regions and different jurisdictions are approaching this with their own priorities. So, as I mentioned, in the US, there's a real premium on stablecoins, on private money. There's this policy decision that they would like basically universal access to US dollar stablecoins, and also I think increasingly things like US equities in tokenized forms that can be distributed globally. In other regions, there's more of a premium on CBDCs and public money. I think it's fundamentally going to involve interoperability between these different forms of money. I think there's different use cases. As Nicolas pointed out, like the stablecoins are primarily used for crypto trading. To the extent there's really other use cases today, it's a little bit of remittances and other sorts of retail cross-border payments where you see, maybe companies like Starlink have used it as a way for people to pay for satellite internet. Whereas today, the tokenized deposits, which are a big premium for banks to preserve the use of deposits for funding, and so they're really focused on building out their tokenized deposit platforms, but they're focused primarily on corporate treasury use cases. And so you see the largest corporate transaction banks focused on serving multinationals and providing a global cash management system. And so you've seen things like Siemens says that it saves $20 million using JP Morgan's tokenized deposit platform, for example. And then for CBDCs, I think it's very clear we need wholesale CBDCs to provide interoperability between tokenized deposits and stablecoins. I think it's very much to be seen the extent of demand for a retail CBDC. Certainly, like the ECNY has a fraction of the volume of Alipay and WeChat Pay. So we'll see to what extent digital euro will really have a lot of retail adoption and whether there's something missing in the market there.
Thank you for that. Now, Kelvin, we're here to discuss the future of money because there are still pain points here in the present. And especially when it comes to cross-border payments, they remain slow and costly. So as platforms play an increasing role, where do you see value move across the ecosystem, and how should investors think about those opportunities?
I believe there are big opportunities. The simple answer is, I think opportunities exist in those use cases with the potential of scalable adoption. So people have been talking about tokenization for a long time. But now, except for the crypto industry, we haven't seen much scalable adoption. A lot of projects have been done. They're at the POC or running at a smaller scale. So we happen to be one of the early adopter of tokenized bank money in the treasury management. Let me tell you my story. So I joined Ant about 10 years ago from Citigroup, where I think I'm moving from the sell side to the buy side, right? The job should be easy. And then I realized it is not. So because I got increasing demanding requirement from my business department, which are those in the digital economy, cross-border payment, e-commerce, which runs 24/7. They deliver service and goods to customer much faster than what traditional financial systems are doing, which works on 9 to 5, sometimes 9 to 6, and probably a lot of transactions are being settled T+1, T+2. Okay. So about 2019, we started to consider using blockchain to link our major cash banks. So at that time, 2 US bank and 2 UK bank. actually joined us to build a treasury platform we call Whale blockchain treasury platform. And in 2023 and 2024, Singapore and Hong Kong launched Project Guardian and Project Ensemble, which allowed us to launch tokenized bank deposit together with our banking partners. Now we have moved about 50% of our treasury flows onto blockchain, which in 2025 we did more than 600,000 transactions, which helped us significantly reduce our working capital by about 60%, and that also significantly reduced the risk and cost that we spend on the FX. So we see great benefit of using tokenized bank deposit to achieve what we call real-time payment. But real-time payment could just be a start. Along the line, we're now moving into what we call real-time treasury. So most recently, we invested in Amundi's tokenized money market fund in both dollar and euro, which we wanted to achieve a vision that we will also move probably 10, 20, at the end, 50 or even more percentage of our investment in the real-time investment vehicles, which we can link tokenized bank deposit with tokenized money market fund, so that we can put our surplus liquidity. Every company has a certain amount of money to put in the CASA account or into those real-time investment. So I think there are big potentials for the tokenization to be used in different use cases, and treasury management is the one that we believe has already showed the potential.
And I think that's the key word here, potential. Because there's a paradox when it comes to technology and innovation within the financial ecosystem, because for years, technology has promised us a borderless financial system. And instead, what do we have? We have regional regulations, we have a myriad of digital asset forms. So are we looking at a future of competing monetary blocks with different standards and rules? And how can we change it or avoid it?
Well, I think different geography have different regulations without the difference between Asia, Europe, US. But I think increasingly I felt more and more institutions are putting them on the top agenda. My personally has been invited to speak to the executive committee, sometimes board, of large financial institutions where they're telling me they're in the agenda to set tokenization as one of their top priority. So I think the consensus is over there. My sense is that for banks, the 101 of tokenization is tokenized bank deposit. This has been a consensus. For asset manager, increasingly, the 101 is a tokenized money market fund. But now, the geographic difference actually in the sell side, but on the buy side, in all regions they have one issue. We don't have too much treasurers or users of this product yet. So on Monday, I was in Hong Kong and with HKMA in the event, the first event we did between the tokenization service provider, the sellers, to the treasurers. We organized about 50 treasurers together around the table to talk about it. Because I told HKMA saying that I was often invited to conferences. When there are 4-person panel, I'm the only one on the buy side as a treasurer. When there's 10-person round table, I'm also the only one. There was one round table at the end of the Hong Kong FinTech week last year. There is a big 40 people round table, and I'm still the only buyer. All the others are bankers, asset managers, regulators, and all of them are actually trying to build up infrastructure, but the lack of buyers. So I think if you are talking about the difference, I think we also wanted to talk about the one issue that happens across the region. I think there needs to be more activities, including the potential users, into the discussion, into the roundtable like this.
Thank you very much for that. Nicolas, now for a business perspective and maybe a regional perspective. Here in Europe, what should we do to strengthen our position in digital assets?
Well, as Kelvin said, we need to accelerate on the adoption because I mean some technology already there and platform like us are regulated in order to deliver those products. So we need to partner more with traditional asset manager, bankers, and also because today we are regulated under MiCA, which is the European regulation for digital assets. But the future is to be able to distribute more products, which are today financial products. So we will need to become investment enterprise firm to be able to move to more regulation and banking infrastructure. In fact, that will help also to accelerate the adoption, because we'll be able to see more people to make sure that the people understand more the type of product, because today they will consider that digital assets are maybe too close to risky assets, volatile assets, which is not anymore the case with stablecoins, but also with tokenized money market funds and tokenized deposits. So there is a total change, in fact, in the industry, but the people does not really understand this. So platform like us need to, on one side, move in the regulation space to be able to bring to those people this type of product which need more regulation because are more close to investment firm regulation. And on the other side, we need to explain also to people. But I'm pretty sure that the people will be very happy, from companies to individuals, to see the possibility to access to very easily at every time, even during the weekend, to product which will deliver 4, 5, 6% interest rate, depending on the product category. So the future will be the convergence also between the traditional players and the platform like us.
So more education and even more regulation?
I think yes, because if you are talking about securities, you need to be able to be MiFID licensed. Otherwise, you won't be able. And some products, the most interesting one, are considered as securities. So except if you go in the DeFi, which is still out of MiCA right now, you can probably stick with the existing regulation. But if you want to do something very big, very challenging for the overall industry, will need to be to fulfill the entire regulation around financial product. So, and it's already the case with stablecoin. We have to be DSP2, DSP3 license as well. So it's already the case.
Thank you for that. I have a last question for all of you. We're going to try to look forward here, not 30 years ahead, because that would be science fiction, maybe 5 years ahead, since we are talking about the future of money here. So what could everyday money look like in 5 years, according to you, Kelvin?
As I said at the beginning, I believe there are big opportunities. But I think instead of, at the same time of building the regulation and infrastructures, we also need actually spend more time on the implementation. Let me give you an example. We signed MOU with Amundi at the end of last year. Well, we started to invest in tokenized money market fund, but we found out most of the tokenized money market fund is around 15 to 25 base point more expensive than the conventional money market fund. Because this product was originally designed for the Web3 people, and they're used to pay a higher bid offer. And blockchain solves the efficiency issue, but not the cost. Therefore, in the last 5, 6 months, we worked with the team together, co-creation, to from step by step, from the very beginning to the end, to look at the cost structure of how to actually adopt a tokenized money market fund to the real money, to the treasurers like me in their daily usage. So we successfully reduced the cost. Actually, to the current level, we believe the real time will bring more than investment, more than the conventional. So I think adoption will help us to find out the real issues, and by addressing these issues, I see a big potential of tokenized asset.
Thank you. Nicolas, maybe next.
Probably in 5 years, you will see more usage of wallet because we are talking about tokenized assets, and you need to be able to manipulate, custody those assets, which is not done through the traditional way. So it's not so much people today understanding how it works. There is maybe from 7 to 13% of the French people which have already touched crypto at one point. This is not that much, and we will see probably a big increase due to the development of what we just said. So probably more wallet, more usage in the overall population, and also across the enterprise and in the various industries.
Joe, what will money look like in 5 years' time?
So I think to a great extent, it'll look exactly the same as today. It's just going to take longer than that. I think I liken it to like self-driving cars. We've been talking about self-driving cars for 15 years, and clearly, you know, Waymo exists, and I've ridden in one, but most of the time I'm driving myself around, and I think it's going to take a long time. Just there's a lot of problems to be solved in order for this to really take off. And I think Kelvin and Nicolas have both touched on many of them. You know, we did a report recently where we looked at just the range of scenarios, and I think even under the most aggressive scenarios for where things will be in 5 years, I think I fully expect deposits to grow over the next 5 years. I think that even things like cross-border payments, which are probably the most exposed, will probably no more than a third will happen on blockchains, and probably a lot of that will be tokenized deposits, not stablecoins. I think that the longer-term potential of you know, the ability to move, you know, assets and liabilities in real time, much more automation for investors, better portfolio management with fractionalization and a lot of optimization, corporates sort of being able to have global liquidity pools, even retail, you know, benefiting from just more competition. I think that's all there, but I think it's gonna be probably more in the 5 to 10 year range where that will start to really sort of see that exponential growth. And I think the message that I have for a lot of my clients is it's not that it's going to happen immediately. It's that it's hard, and it's going to take a lot to sort of integrate with your systems and to solve the risk challenges. And so you need to get started, because I think really the risk for financial institutions is that increasingly certain you know, financial products are going to be commoditized, and you want to be more in the value-added services and really solving problems for your customers and closer to you know, where they're actually initiating decisions and workflows as opposed to just represented in somebody else's wallet.
Well, thank you very much for presenting your vision with us. A big round of applause, please, for our guests here around this table. Many thanks to all of you.